Well, good morning, everyone. It is Monday morning, January 3rd, 2022. So it's our first Zoom training of the new year. Today, we're going to focus on implementation rather than client development. I think at this point, most of you have figured out how to generate leads, how to convert the leads, and generate the volume. If not, I'd recommend starting with talking with Scott Stroud, our Chief Marketing Officer, and getting started with him. But most of you, I think, have the lead and client development portion figured out. We're seeing massive volume from many of you, so that is all good. Let's talk about bookkeeping. Bookkeeping is how we go about recording our revenue and expenses. And you could call it accounting if you want, but really we're not doing much planning at this point. We're just recording the transactions properly. So that's what we're going to talk about this morning, is how we believe that you should be tracking revenue and expenses, how we're going to be more diligent in tracking ours, and how we'll impact each other. So with that being said, each time that you enroll a new client into the Access to Capital program, in our opinion, you should be recording those economic events. Now, what does it mean to enroll a client in Access to Capital program? If you are a white label partner, that means that you've used your agreement, your version of the Access to Capital agreement, whether it be online with terms and conditions, which we'd recommend, Scott can help you set up, or you've done it some other way, Adobe, DocuSign, whatever, but you have the client under contract. Once you have that client under contract, there are promises that are made. Specifically, the client's making some promises to you about what they're going to do and how much they're going to pay you. And you should be recording that. Now, where do you record it? We recommend QuickBooks, not because we have any kickback or financial relationship with QuickBooks. Just I used to teach it. It's probably it is the number one small business accounting software, but we don't care if you use QuickBooks or something else. If you use QuickBooks, we can better support you because we understand it. But regardless of how you're going to be tracking your revenue and expenses, there's a few metrics or economic events that we think that you should be recording maybe more diligently than what you have, because it more properly reflects your income and expenses. So let's first look at your accounts receivable. Now, what we're going to do is we're going to make an assumption here at this point that you're using standard pricing. If your pricing's different, that's okay, but then these examples won't be exactly correct. So let's take Joseph, one of our top white label partners out of Arkansas. So every time that Joseph signs a client up for Access to Capital, which Joseph will do at least 8 this month, right? All of us need to do at least 8 a month to stay compliant, but there's no reason we can't do a lot more than that. So I'm not worried about those numbers. So each time Joseph signs up a new client, he's going to go into his QuickBooks and create an invoice to the client for $12,500. That is assuming that Joseph is using standard contractual rates. So that is composed of a $2,500 deposit that the client owes Joseph. Does the client owe Joseph that money as soon as the client signs up? No, because the concept of Access to Capital is Joseph's not going to invoice the client until after their first capital raise, but we know it's a contractual commitment. So it's not due yet. It's like you could hire me. I could come to you and say, I'll mow your yard this summer in 2022 for a flat fee of $1,000. But just because we've made that agreement, I can record that, but it may be that none of that money is owed yet. I might say, well, it's $1,000, but you won't need to start paying me until April or May when we start mowing the yard. So there's a difference of when you're expecting the client to pay it versus recording that the client does owe it to you, and thus it's AR, it's accounts receivable. So if you're using the standard language, they're going to owe you $2,500 for the deposit, and they're going to owe you $10,000 performance fee, assuming that you're charging 10%. Again, it's fine if you have different price structures, but I'm going to use just the standardized pricing to reflect it. Well, why would you want to do that? Because you're saying, well, the client just signed up, that they've not received any funding yet. Well, why would I be doing this? Because it's the proper thing to do. The client has at that point promised to pay you $12,500 based upon future triggers granted. When you record that, that builds your balance sheet, because let's say that you did 8 clients a month. What's 8 times 12,500? Well, now all of a sudden we can see that's why this is a $100,000 a month relationship, because you're going to be at 6 figures just off of 8 clients. Secondly, you can sell accounts receivable and or use it as collateral to borrow money if you wanted funds to expand. But if we're not recording it properly, it's not going to be accepted by the banks or the financial institutions. So a signed contract means that the client has executed an agreement with you, whether it be terms and conditions or in another format. So now you know you have $12,500 coming into you, and that's recorded. So we've covered that. Now, the other side of that is that you know that you've promised to pay us at least $4,250 per enrolled client. Now, for us, an enrollment means you've gone to the white label client submission form on the iimfl.org website and submitted them. So the first step is they contracted with you. And then the second step is you put them in on the submission form. That's a submission or an enrollment. You might say, well, why do I owe you guys $4,250? It's the agreement that we signed. Just like the client signs an agreement with you, which adds up to $12,500. You have signed, if you're a white label partner, you sign an agreement with us that adds up to $4,250. And that is 50% of the refundable deposit, no less than $1,250, and 50% of a $100,000 capital raise at no less than 3% of that. And so that's where the $4,250 comes. Now, for both you and us, we understand that the client might get a lot more than $100,000. So this performance fee, that's why this little asterisk is here, they might end up paying you a lot more than that. And of course, we're doing a 50-50 split, so it could be more than the $3,000 for us. But what I'm encouraging you to do is to be diligent every time that you enroll a client. Of course, you want to submit them with us so we can go implement, but you really need to be tracking your revenue, the $12,500 per, and your expenses, the $4,250. You all might have noticed that we've started this process as well. So starting January 1st, when you submit a client in, we're implementing the client like we've done before. We send you an email and confirm receipt. We send the client the Adobe version of the one-page funding proposal and copy you on it so we can go get them their first tranche of financing. That's the same. But also now you're getting a QuickBooks invoice from us for this. So don't be alarmed. Like Andre sent in, I don't know, 4 or 5, 6 clients already this year, this month, in the first 3 days. So he's getting these invoices. It's not meant to be a deterrent to submit clients, but it's clarifying, okay, while this isn't due yet, because we don't expect you to pay the $1,250 to us just because you submitted the client, it's going to be based upon you receiving the money from the client. You and I both understand that, but it is an accounts payable. We don't invoice this necessarily up front. We're focused on this first trigger. So if you're following good business management protocols, you're recording each client as accounts receivable in your system, and then you're expecting an accounts payable of $4,250, of which we will invoice you the initial $1,250. But again, we're not asking you to pay that invoice right away, but you should recognize, okay, that is a future obligation and should be mindful of it. So with the client, we're going to try to go get them cash funding. For most clients, they get cash funding. We're seeing clients getting multiple rounds of first tranche financing now. We've got a couple of you that have submitted clients that have received 3 to 4 deposits of cash funding from their first tranche financing. So in other words, they're accepting multiple offers. If you're familiar with that term, they're stacking the offers. So just clarifying what you should be doing from tracking your receivables, from tracking your payables, and to keep you from frankly being alarmed that you will now be getting an invoice from us as soon as you submit each new client, because we're following the same practices that we're asking you to follow. If that doesn't make sense, feel free to ask a question. Winston does have a question. He says, should white label partners be incorporated before starting? It doesn't matter. You don't have to be incorporated to be a white label partner. It's not necessary. There's some good reasons to do so, but it's not a requirement. Okay, now we're going to go to a little bit of an advanced topic of this same, and we're going to talk about if you're a regional vice president. Many of you have expressed an interest in getting overrides by bringing other white label partners on. And I don't care if you do that or not. You don't pay anything to become a regional vice president, so it's not like money to us. But if you're interested in overrides of bringing aboard other white label partners, now you need to record that as well. So let's talk about that for a moment. So if you are a regional vice president, which again, there's no cost, then you need to be booking the following every time you enroll a white label partner. Because as a regional vice president, this isn't a role where you're worried about getting clients. Instead, what you're focused on is bringing on white label partners who go out and get their own clients, right? So now the booking is going to be a little bit different. You're going to book for every white label partner, and you'll be doing this each month in January and February and March and so forth. First, you're going to book $5,000 for each white label partner each month. Well, why 5,000? Well, you know, you're getting, if you're following the normal model, you're getting a 25% override. So 25% of 2,500 of the deposit is 625. You know that each of your white label partners are committing to enrolling at least 8 clients a month. So 5,000 equals 625 times 8. So you know that's coming to you. And then secondly, what you know is coming to you as a regional vice president is at least $20,000 of performance fees. Well, where does that come from? Again, same 8 clients, assuming that the clients only raise the minimum of 100,000. You're then, and if there's a 10% performance fee being attached, you're getting a 25% override of that. That's 2,500 times 8. So it's not a bad gig, because you know for each white label partner that you enroll, you should be booking in your QuickBooks or whatever system that you're using $25,000 per month. Now, again, we're using what's called accrual accounting. So all of you accountants or all of you business majors or anyone that's experienced in business, you understand, as we've talked about before, there's a difference between cash accounting and accrual accounting. Most sophisticated businesses use accrual accounting. That's what we're talking about here. You're recording the economic event once the commitment is made, either to receive money or to pay out money. Cash accounting is when you're babysitting, right? And you go babysit for 4 hours and you charge $20 an hour. Once the $80 is in your hand, you would record it. But most sophisticated businesses use accrual accounting, not cash. And here we're recording revenue when it's committed to, and expenses when they're committed to, not necessarily when money changes hands. So would you expect in January, if you went out and signed one new white label partner as an RVP, would you expect to put $25,000 in your pocket this month from the work of that white label partner? No, probably not. It's going to take some time for that funding to be recognized, but it is a commitment and an expectation that you can record. So that's a pretty big deal, right? So if you wanted to focus on managing and leading, you would probably go out and develop multiple white label partners, support them, assist them, encourage them in being successful. And that's a nice revenue stream coming into you. We've talked about this before, but I knew someone would ask, so I just went ahead and put it on here. It's really easy to become a regional vice president. Again, there's no contract with us you have to sign. There's no cost, of course. What you'll want to do is create a joint venture agreement. That's between you and the white label partners that you're bringing aboard. You can get those online for free or next to nothing from Rocket Lawyer and these other online services. Once you have your agreement with the white label partner that you're bringing aboard, then of course you execute it with them, and then you submit them in, have them sign up with us. So you're protected because you have the agreement with them. It has the non-compete, non-solicitation, whatever language you need in there to protect you, has the revenue split, which is normally the 50-50. So once you've created the joint venture agreement, then you use it as you add white label partners, then you have them sign up with us, and now you're protected. They can't circumvent you. They can't cut you out. You're going to get the overrides on all of their business. And then we do recommend go ahead and email us a copy of that JV agreement. Okay, so let's open this up here. So in summary, what we've discussed is I think that we've all figured out how to drive in volume. We've had the trainings and the support. Scott Stroud, our Chief Marketing Officer, can get you your landing page. I mean, if you need help still generating volume, we can, but most of you are beyond that. You know, you're generating good adult volume, good adult income. So we're good there. So instead, what we want to focus today is on proper financial record keeping. So you're tracking your accounts receivable, as well as your accounts payable. And then understanding why, as you submit each new client, we'll be submitting an invoice to you for that initial $1,250. Not expecting you to pay it the moment you receive it. You wouldn't pay for that until later in the process. Normally, the client's going to get cash funding. You'll invoice the client, they'll pay you, and you pay us. So what questions do any of you have over this process? All right, so Timothy's asking about outsourcing. And so yes, Timothy, if you don't really want to do the QuickBooks yourself, you want us to do it for you, we have the competency to do it. We can set up a QuickBooks account for you, Timothy. We can record your accounts receivable. We can record your accounts payable. We can reconcile the accounts. We can do that for you if that's what you need. We're not encouraging that, but what we are saying is that any business needs to have the ability to report income and expenses. That's important, and you're going to see that with your clients too, Timothy, that you bring aboard. You're going to have a lot of clients that say, "Oh, I want 100,000 or more to start or grow a business." Timothy, we go through that 4-week process, and we ask them for things like a balance sheet. And they're saying, "Well, I don't have a balance sheet. I don't have an income statement." Well, that's illustrating that they're not properly set up as a business. They're probably not using QuickBooks. They're probably not recording their transactions in and out. And so you can help them with that, and that can be an extra revenue stream for you, or we can help them with that, or they can get it done however they want. But it is an important part of running a business properly to track revenue and expenses. And when you do that using a software like QuickBooks, it becomes super simple to generate financial statements. Also, what we're talking about here is that you're going to recognize increased access to capital yourself by properly recording this accounts receivable. Because again, I know each of you are committed. We're committed. You're committed. We're promised to generate at least 8 deals per month. In January, absolutely, we should be doing that. We've given a lot of grace months leading up to this. But in January, there's just no reason that we each can't help together at least 8 clients. So that's $100,000. Well, you do that in January and February. Now you got 200,000 of accounts receivable, although some of it will pay out, but 200,000 in sales. By the end of the first quarter, you got $300,000 of sales recorded properly and accurately and responsibly in your business. So you don't think that that increases your access to capital if you wanted to borrow money to leverage to expand what we're doing together or other business ventures? Of course it would. Your business is going to look so strong by doing what you've already promised to do, but just by recording the transactions properly. Okay, David asked a good question. So QuickBooks is easy to get. You can go online and get QuickBooks online. And I think they have a promotion. It's like $12.50 a month. I mean, it's next to nothing, right? If you need us to pay for it, let us know. But I mean, it's next to nothing. So then at that point, congratulations, you have QuickBooks Online. Now, what do you do with it? Well, there's a few options. You can figure it out yourself, and QuickBooks has good support. Again, it's so widely used, and you don't have to use QuickBooks, but they also have a bookkeeping service that you can access through QuickBooks Online. We can do it for you. You can outsource it, but I guess David's right. It's not just simply getting QuickBooks for $12.50 a month or whatever it currently is with their promotional pricing. It's using it. You know, most strong business leaders will say, do what you're really good at and outsource the rest. And so if it's stressful or cumbersome, you may just want to outsource the QuickBooks activity. My point today is we shouldn't be ignoring it. And it'll be harder for you to ignore, because even if you're not recording your receivables, you're going to start seeing the invoices come from us each time you submit a client. Again, not changing when you pay us and not making it more expensive to work together. Obviously, you're bringing in a whole lot more money than you're spending. It's very profitable for you, but we're going to be more diligent in 2022, so it'll be more visible to you. But you're right, David, you've got to decide, do you want to learn how to do it and do it yourself, or outsource it? And you have many options to outsource it. Okay, so Marcel has a good question. So on the 50-50 split for our white label partners, we don't know what each white label partner is going to choose for the deposits, and they can make it refundable or non-refundable, and what they're going to charge for the performance fee. So if you look at the white label agreement that we have, that we've executed together, it says we'll do a 50-50 split of both of these, which is very fair. But there's a minimum. So why is there a minimum? Well, let's say that you came in and you didn't want to charge $2,500 for the client's deposit for building the loan package. You only wanted to charge them $1,000. Well, that'd be $500 for you and $500 for us. Well, there's a whole lot of work, and $500 really isn't fair compensation to you nor to us. So again, the white label agreement, everything's in writing, but it clearly states it's a 50-50 split, Marcelo, with a minimum of $1,250. And the performance fee is a 50-50 split with a minimum of $3,000, which is assuming that you wouldn't be charging less than 6% of a $100,000 capital raise. Thank you, Marcelo, for those questions. All right, Andre's asking about the RVPs, and I do expect a lot of you to really get involved in the RVP role, because it just makes sense to diversify your income. So it's not only what you're producing as a white label partner, you're getting that valuable override from other people's production. You control, and Andre, you're right, I keep referring to a 25% override, but that's up to you. You decide what the override is, and then that is built into your joint venture agreement with your white label partners. And so that is essentially splitting the income with them. Normally it's done a 50-50 split, but that's under your control. You have an agreement with them, and it's between you and them. All right, so who else has any questions today as we wrap up first training of 2022? we're not so burdened with how are we going to get clients. We know that there's almost an infinite number of small businesses that want to need capital. We know we've got a great program that works, guaranteed $100,000 capital raise, first tranche in the first 5 to 10 days. In almost all cases, everyone will get some sort of financing offer for that first tranche. And now we see a lot of clients receiving multiple rounds of funding, even for that first tranche. We had a client this morning, he received his third round of his first tranche. So getting clients, converting clients, not much of a problem anymore. I think most of us are over that hump. If not, please get with Scott Stroud, our Chief Marketing Officer, and he can help you with that. Now we need to focus on making sure that you're running your business properly. And by doing so, you'll have more accurate financials. And also you'll be able to leverage this as collateral or even sell your receivables for greater access to capital for your pocket. So does anyone else have any questions regarding today's topic on proper bookkeeping practices? Any other questions? And again, we don't have any financial interest in QuickBooks. If there's a different software or system that you want to use, that's fine. QuickBooks is just what we use and what we're most familiar with. And you'll see QuickBooks at work, quite frankly, because each time you submit a client, we'll go ahead at the time that we're setting up the client, we'll go ahead and get you an invoice for half of the refundable deposit. We don't expect you to pay it instantly, right? It's not changing when you owe. We're going to work together and get that client funding, but it is us practicing what we preach. Any other questions that anyone has? All right, so we have a few of you that are affiliates. If you're simply an affiliate, frankly, you don't need to be worried about this to the same degree. If you're a white label partner, you're running a business and you need to run the business properly. But if you're just an affiliate, you submit the client in and you can wait to get paid. So that's a good point. Affiliates get paid less, they do less, they're not mentoring the clients. But this over at a high level is good topic for any small business. We need to be recording revenue and expenses properly. And by doing so, we'll be able to generate financial statements. And by generating financial statements, we're going to have increased access to capital because we're showing bankers and lenders in the outside world that we're running our business like a business, not like a hobby. All right. Who else has any questions on the concept of proper bookkeeping practices, whereby you're booking an accounts receivable each time a client signs with you? You should be booking an accounts payable each time you've completed the submission form with us. You can anticipate receiving an invoice now in short order for the first $12.50 of each client submitted. The regional vice president role is available. There's no cost. It's an opportunity to earn overrides based upon the production of your white label partners. The initial goal was to have RVPs that generated at least 4 new white label partners a month. So they were actively growing a network of income producing white label partners. But frankly, we've relaxed that. So even if you wanted to bring just one white label partner on, you can get the overrides, you can see the good income. And so it's more scalable based upon your needs. Any other questions, comments, concerns? All right, Wayne's asking, and you're right. So we're going to do monthly reconciliations. So our compliance department will be reaching out to each of you that are a white label partner. And even if you've done the prior reconciliation, now that December is closed out, we're going to need to do a reconciliation for the December, and each month thereafter, we'll be doing reconciliations. We want to review every client you submitted and make sure that those clients are being well taken care of. Are they progressing? Where are they at? What do we need to do? You may have clients that don't participate, that aren't active, not engaged. And if that's the case, we've talked about proper processes. You should invoice them, in our opinion. And after you've invoiced them, and if they haven't paid within 30 days, then a demand letter should go out to them. And we're issuing, I think we'll issue probably 100 demand letters this week, and that number will continue to grow because unfortunately, some people don't do what they promised to do. And so you invoice them first, then you escalate it to a demand letter. And then as we talked about in the prior training, you need to make a decision. Are you going to litigate? Are you going to send them to a collection agency? You got to write it off. You got to sell it to a debt buyer, but you need to do something. And by recording your accounts receivable, as we're talking about here, you're going to have a much better grasp of what your pipeline looks like financially. All right, any other questions for today? All right, well, we will regroup tomorrow morning, same time, same place. Let us know if there's anything we can do for you, and let's have a great January together. Thanks, everyone. Have a good day. Bye.